can I just start with the idea they're minting money?
Yes, and it's one of the most profitable business models. I mean, along with Google search, this is the model for, incremental margins of north of 90%.
And that doesn't matter.
Because what they said on the call is they are raising their CapEx without curtailing anything on the Reality Lab side. And that's the part that's losing $4 billion a quarter.
Wait, is Reality Labs iThings?
Yes, those are your AR, VR glasses.
Okay, it's tanking at Apple. Do we think it's tanking at Facebook?
I mean, they wrote down a bunch of inventory. So last night when they reported Reality Labs, included in that loss was inventory write-down. And so that tells you something, that the demand is not there. There is no path to monetizing Reality Labs engagement. They're selling the hardware at almost a negligible gross margin. And that's why, the fact that they raised the CapEx without offsetting anything on the Reality Labs takes you back to the 2022 days where, we're going to raise our CapEx and OpEx and our revenue growth is going to be low single digit. That's not the case here. They're actually doing remarkably well on the core business engagement. If there's a TikTok ban, it may actually help Meta's engagement. But still.
Paul, I'm just looking at the CFA numbers, the ratios. It's a money machine.
It's unbelievable, Tom. I'm just looking at the FA screen for Meta here. They're going to have mid-teens revenue growth, 160 billion of revenue this year, EBITDA margins of 56%. EBITDA, free cash flow,
Folks,
46
all
billion.
you need to know, that's like a drug cartel and you name the country.
Exactly, It's extraordinary. It feels like the stock a little bit oversold here, down. I was surprised to see it in the aftermarket yesterday, down 15 to 20%. But I guess it just spooked investors because what has worked for the stock has been this cost-cutting mindset of Mr. Zuckerberg and the management team. And now maybe that story is losing some of its momentum. Is that kind of what's driving the stock here?
I mean, look at the operating margin expansion. It went from 23% to 39%. So in just a year, because of the cost cutting and the efficiency. And that puts into question, if their revenue is growing mid to high teens, why doesn't it trickle down to share buybacks and, better capital allocation? Why will their margins be flat? And the reasons they'll be flat, because they are spending more on AI, which I think is good spend. It's the Reality Lab spend that's sticking out and without any markers.
All right, so I don't even know what Reality Labs is versus Metaverse. Are those two separate things?
Yes. So look, I think Reality Labs does include an element of augmented reality. So they have a partnership with Ray-Ban, which they called out last night that the Ray-Ban glasses are doing very well. And I believe so. I think it's a new category that they can curate in addition to VR, where they have a competition with Apple. The problem is, how are you going to monetize that engagement? You can't show ads on AR glasses or VR. So there's no...
See?
It's just a hardware sale.
This is where I draw the line. I see no evidence whatsoever that goggles are a constructive business. I'm waiting.